Because Blackrock and Barclays are said to still be working out the details this morning in what could be the industry's largest asset management acquisition. Lindsay Jennings joins us now with the latest from London. Lindsay?
Scarlett, good morning. A person familiar with the negotiation says that an announcement could now come as soon as tomorrow. Now, BlackRock is set to pay between $12 and $13 billion for Barclays' global investors division. The Wall Street Journal saying this morning that Barclays may even get as much as $14 billion for the unit. Now, the transaction would be half cash, half stock, and Barclays would have a 20% stake in the new company. It would create the world's biggest asset manager by a long way. BlackRock would oversee $2.8 trillion in assets. That's more than the Federal Reserve. Now, Barclays is keen to raise capital as it expects write-downs and other losses to spike by around 50% this year, Scarlett. So this could help it with its old Tier 1 capital ratio.
Well, there's certainly a big theme with banks trying to avoid government influence, but it goes both ways because governments don't exactly want to be owners of the banks either.
No, these were really forced marriages, as we know, and the banks were like the spouse that needed the green card. And now we're starting to see cracks in these marriages and divorces on the horizon. You've got the U.S. banks wanting to pay back those TARP funds. Here in the U.K., Barclays has tried to avoid government ownership at all costs and has succeeded. But also today, the U.K. Treasury has asked its advisors to examine whether it can offload Northern Rock sometime this year. This is according to the Times newspaper. Now, Northern Rock was nationalized by the U.K. government at the start of this crisis, so wouldn't it be nice if it could offload that by the end of the year?
Wouldn't it be nice? Bloomberg's Lindsay Jennings in London.